Hello everyone, my name is Florian Munsch from Goldgeldwelt, and today I'm joined by Simon Dyakowski, who is President and CEO of GSP Resource. And GSP is a copper company located in BC in Canada. And yeah, copper is moving quite well at the moment, reached $3. And Simon, maybe we can dive into the interview and you can highlight or give some thoughts about the copper market right now.
Yeah, sounds good. Thank you for speaking with me this morning. I guess evening for you, Florian, but it's great to be on your show here. And yeah, you highlight that copper has had a pretty incredible run of recent, trading up over $3 a pound over the last couple of weeks on, on what I believe, I've seen some reports of some rumors of shortages and declining stocks in China. So, $3 seems to be a psychological level in the market where, the broader investor starts to take notice of copper again. But we've actually been seeing the price of copper trending up in a rather orderly fashion since the March lows of this year during the height of the coronavirus panic. And copper was trading, you'll recall at the beginning of the year it was up, looking at breaking $3, $2.80 to $3, and then it really sold off January through March as the market caught wind of some risk creeping in with coronavirus and some economic slowdown. And then it fell down to about the low twos. I think it got down to 208 or 210. I can't remember the exact number, but what I thought interesting there was that it actually never dropped as low as it did in the kind of the post-cycle period. So between the financial crisis and today, it did drop lower. I can't remember what year, I think it was 2015, but it got down to about 180. So it held support there, long-term support at above $2. And then, since then it's been onwards and upwards. And, it's as they say, precious metals start the rally off. So you had gold and then silver, start to take off, and then base metals tend to follow. So I think that's what we're seeing now is the base metals are starting to catch up. And there's, obviously a number of factors that could be driving that, recovering demand and, possibly as well the impact of some currency devaluation in the US dollar and in other currencies, as governments are kind of in the race to the bottom to print as much money as they can to keep themselves in power. But anyways, for us, it's a great time. Like we picked the project up, we picked up the Alwin project around Christmas last year in January. And, copper was trading well at the time. And we thought, well, hey, this is a great project, regardless of the price of the copper, but, we'll get a nice tailwind here. So we negotiated the deal to pick it up and started, planning to get our permits and planning our drill program. And then, lo and behold, the price of copper crashes. But now that we have our permit, we can talk about that in a minute. We just got our permit. We just started drilling, actually. Now copper's higher than where it was when we came up with this plan. So we're very happy. So, in the end, maybe we were fortunate to have gotten the permit when we did. And now we're able to kind of ride along with an improving sentiment towards copper. So that's something investors.
Before we dig in deeper about GSP Resource and your current drilling, do you think the current positive development for copper prices are sustainable? Like speaking of a potential second wave in Corona or an economic slowdown, we haven't really seen yet because of all the money printing you talked about. So what's your take on this?
Yeah, I mean, I personally think that any kind of second wave that comes through isn't going to have the same impact of halting all industrial activity like it did the first time around. It seems like depending on where you are, they have different plans in place for localized shutdowns, but I don't think it's going to have the same overall like going along from normal to outright panic, shut everything down. And that had a negative impact on all the commodities, and I don't see that happening going forward. So there's always risk for these markets, global recession, but I think the the currency debasement is more than offset that risk for now.
Yeah, and lots of investors are like piling into gold investments, and gold is really getting some attraction. Silver has outperformed as well, but copper being an industrial metal, and you said that the precious metals sometimes lead, but the base metals follow. So there's a bigger commodity picture here.
Yeah, exactly. And, you know, I mean, let's say there is a second wave, but there's going to be a recovery from that wave. And that's, you know, that's when we're, you know, I think we're in the time frame now when, you know, there's kind of a coordinated effort to spur demand and get things going again. And that's, you know, that's always good for commodities. So we're excited for looking for commodities at this time.
Okay, let's talk about GSP. Full disclosure, I'm a shareholder, and yeah, very interested in this story. So could you, for investors new to the story who have never heard about GSP, tell what is it all about?
Yeah, so it's a company that we listed just under 2 years ago in November of 2018. It's it was an initial public offering, so we acquired an option to acquire a project in British Columbia in Canada here. We did a bit of work on the project, some scout drilling, had some interesting results, but decided that, you know, we wanted to get our hands on something a little bit more advanced. So last fall, our team started looking around for other projects in BC. We like BC, British Columbia, because it's a known mining jurisdiction. You know, many investors are familiar with projects in BC. Mining's not new here. You know, it's generally supported by local communities in the north. It's a big driver of employment. And, you know, there's been a ton of investment in the British Columbia mining projects. So there's lots of opportunities to uncover projects that maybe deserve a second look. So that's what we did, was we uncovered a project that we felt deserved a second look. And what we have settled on in January, we announced a deal to acquire, and we have an option to acquire 100% of the Alwin Mine Project. And the Alwin Mine is a historic, high-grade, past-producing copper mine. Very high grade. It mined very high grades of copper during 3 major periods of mining. The first one being around the turn of the last century, around 1910, around World War I. They were mining, you know, very high grades of copper at surface out of Ashcroft, British Columbia. And then a private syndicate of companies got involved in the project in the late 60s, where they built a more modern mine for the times there. They were underground mining, still at a small scale, around 500 tons a day. And they ultimately sold to an American private company called Dyakowski Mining, and they mined for a couple of years in the early 80s. And they shut down. I think it was 1982, and I believe, I just looked at the price of copper at the time, I think it was something like 55 cents or 60 cents. So it was, you know, one of those times when copper was really, really out of favor. So these guys that were mining it, they had industrial interests in many industries, and, you know, they just elected to go home rather than fight, you know, a low copper price environment. And they weren't necessarily a mining company, you know, in and of themselves. So, you know, we thought it was kind of abandoned for the right reasons. It wasn't really condemned. They didn't mine everything out. They barely mined any of the ore that they found over those 4 main years of mining in the early 70s and early 80s. So we thought, you know, why don't we get another look at this, and we'll compile all the data that all the previous companies had. And there was, you know, I've only mentioned a couple of them, but there's been another couple as well in the 90s and in the 2000s that drilled and you know, had a view of developing the mine again. And so we thought, well, look, it doesn't look like anybody's actually kind of taken a comprehensive look at the whole project, at all of the zones of mineralization that these previous groups are looking at, you know, and putting them into a 3D, like a computer model, and then designing a program from scratch to, you know, to define and to look at, you know, how much is left, how big might these zones be, and, you know, is it worth for us to go in with a drill and, you know, drill from the surface and see if there's, you know, if we could put some of the shallow mineralization together into an open pit maybe, right? Because they were only at underground mining before. They were, they're mining very narrow widths, and we were just puzzled by why they were doing so. So we're going to have a chance to look into all that this fall, now that we're drilling. And as well, one thing that we noticed was that nobody, to our knowledge, has drilled below the mine, right? So this mine sits at the height of land, and it's on a hill basically, and nobody's really drilled below 200 meters from surface. And so most of this old Alwin mine structure is near surface. It's shallow, and nobody's invested any money into drilling underneath it, undercutting it, and looking for the potential source of this high grade mineralization that they were mining. That they mined some of, right? So that, that's kind of a second component to our project that we are very interested in exploring. So we announced a drill program a couple weeks ago that we got our permit. We moved quickly to hire crews and to contract to drill. So we actually announced yesterday that drilling had commenced. So the drillers got up there and they're drilling today. And what we've done is we're calling it a phase 1 drill program. So we're drilling some of the shallow mineralization first, so that we can confirm, that it's there, how it's oriented, how big the zones might be, because we have data from historic production, but it's it's not entirely consistent with today's mineral disclosure standards. So we want to have a look at that. So we're going to drill about half the holes that we need to look into that right now, and then we have several deep targets that we're going to pursue as well.
Okay, so to summarize, you have lots of historical data which you compiled into a 3D model, which helped you to target your current drill program. Is that right?
That's correct. Yeah. So we're not drilling blindly.
And I think what's very interesting about the story is, of course, that you have high grade targets, but these are small scale. So these could be eventually cash flowing, but most of the upside is coming from exactly this potential in the depth. And investors might ask themselves, so why is Simon so confident that there could be something down there? Maybe it's because you have a very, very big mine adjacent to your project. Talk about this.
Yeah. If you want, I can comment on that quickly. So why am I very, very confident there's something down there? Well, I'm not very, very confident.
Yeah, well.
I wish I was that confident, but we are exploring. So it is, we don't know until we drill down there.
Fair enough.
But we're in the business of venture. These are speculative projects in a sense. What I liked about this project is that many mining companies, exploration companies, they only have very speculative targets, right? That may or may not hit, and then everything's riding on that. And for me, I like risk, but that's too much risk, right? And I think for investors, that's too much risk because, they start drilling, everybody piles in, the stock shoots up, and you never know, right? I mean, it could be a good theory that bears out. It could be a good theory that doesn't bear fruit, right? So, then you're kind of riding it all on one bet. So I like this project because, we know that we can probably improve on, or we hope we can improve on the shallow, high grade mineralization that we know is there. So, when we're investing investors' money, spending investors' money drilling, some of that money is going to stuff that is less speculative. But then we also have the opportunity to, while we're drilling, drill into targets that are more speculative and that might represent more upside. And what we found, like I mentioned before, is nobody has drilled much deeper below the Alwin mine. And if you look on the map and you look from Google Earth to see where the Alwin mine is, you will see that less than 2 kilometers to the east of us is the largest open pit copper mine in Canada. So it's not closeology, right? I don't know if your listeners have heard that term, closeology, or in the right region. It's not in the right region. It's next door. It's adjacent to it. We share a border. We share roads with the largest open pit copper mine in Western Canada.
And actually, this large open pit copper mine is getting bigger and bigger. You have an impressive picture in your investor presentation. I will insert it now. And this shows the mine development of this Highland Valley mine. So from 2005 to 2014, it's coming closer and closer to the Alwin project where you are located.
Yeah, and so we're not guessing about that. So we found public documents where Teck has applied and filed to expand the mine life for another 20 years, I think, to 2040. And a lot of the new production that they're proposing is coming right up against our property line. So, they're digging something next to us. And the reason I want to drill deep underneath the Alwin mine is because if you look, now it's a little bit hard to see from an aerial view from Google Maps. I mean, you can kind of get it when I explain it, but if you were standing next to the mine, you would see that they are mining deep, right? They start. It looks like their pit starts at around 1,300 meters above sea level, and then they mine all the way down to something like 500 or less. Now, remember, this is key. The Alwin mine sits at 1,650 meters above sea level, so we're a full 200 to 300 meters above where the top of their mine starts next door. So nobody has drilled deeper than that on our property, and we have a bunch of high-grade copper. And, it came from somewhere. So if it came from a system that was associated with the mine next door, we don't know. Like, don't get me wrong, we don't know.
Yeah, sure.
But we need to find out because obviously, there's a better shot of finding something there next to an old mine, underneath an old mine, than there is somewhere else. I mean,
and these porphyry systems extend for hundreds of meters. So it could be a huge system with different clusters. And
yeah. It could be, but if it's not, then we're also not too worried because we have a very high grade system that we do know about, right? That we need to spend more money getting a better handle on. So it's like I said, it's high risk, but it's low risk, and I like that combination for a mineral exploration company. So that's
not betting everything on one card.
Yeah, we're hedging a little bit, right? So there you go. So that's how I want to build the business here. And again, maybe I'll touch on, another philosophy I have, which is, keeping the share structure low. Obviously easier said than done. Every company has costs, and if you're not cash flowing positively, typically you have to finance those costs by issuing more shares. And, that's how it works in many venture industries, and we get that. But, we want to be very, very careful with our treasury and with our strategy, so that we can, keep the share count as low as we can for as long as we can, so that people that invest have a better shot of making money when there's good news or if we're successful.
And management and insiders own around 25% of the company, so it's in your own interest to keep shareholder dilution low and to work in the best interest of shareholders.
Yeah, I mean, that's how I'll make money, and all the team will make money if we're successful, and if we're successful, the other shareholders will be equally as successful. So that is our kind of our overall strategy.
Yeah.
And again, we're focused Southwestern BC. We're really lucky to have the Alwin, and it's a good part of BC to be in. It's BC is great in general, don't get me wrong, but when you're in Southwestern BC, it's cheaper to operate, right? You don't need helicopters. There's lots of services nearby. There's good roads, infrastructure, everything you need is right there. Whereas in some other parts of BC, like in the Golden Triangle, great place to find gold and copper, actually. A lot of really awesome projects up there, but, it's a little bit more expensive to work up there. And they're also limited in the season they can work at, just because of the snow, the sheer amount of snowfall. And, we get a lot of snow in the Highland Valley too, but, if we wanted to, we could still drill, in the snow. And not have to, worry about prohibitive costs to drill and operate there. So,
okay.
Yeah.
What are coming steps you would like to take? So you commenced drilling now. When can investors expect results, and which steps would you like to do to proceed with the project?
Yeah. So, we've started drilling. We've been drilling for a day. So, I expect we'll be drilling for the next month or so during phase one. And then once all the samples are cut and logged and examined, they will be shipped to Vancouver for assay. And once they reach the lab, I think it's generally, you never know. Sometimes they're busy, sometimes they're not, but it could be anywhere between kind of 4 to 8 weeks to get results. So I think investors can look forward to, in terms of news flow, they can look forward to updates on drilling, how many holes we've completed, what's been shipped to the lab. And then once certain holes have been shipped to the lab, then you can kind of start that 6 to 8 week clock for results. So, October, November, we'd like to update everybody with how we did. Mm-hmm. And once we have a few pieces of core up from the ground, we can start thinking about phase 2 drilling and how that might look. Because, like I said, we're going to drill deep in phase 1, but it's not our only deep target, right? So, we want to make sure that we have, a full and complete picture of all our targets before we make any determinations on, whether there's something there or not. So our first hole in the deep stuff, we're going to run some geophysics down. We're going to see, where we should put the drill down in phase 2. So there's, it's a little bit more complicated than just drilling under the old mine. There's a few deep targets that we're interested in. We're not going to do them all at once. We'll break them up over a couple of phases of drilling.
Okay. And about the acquisition of the Alwin Mine Project, could you elaborate on this? How many years will it take? Which cash, which conditions?
Yeah, so in total, it's 250,000 Canadian in cash, of which we paid 25,000. So we paid 10%. And then it's 4.5 million shares in total. But it's now forgive me, I don't have the breakdown right in front of me, but it's staged over 5 years, I believe, 4 or 5 years. So, in the first couple of years, we only pay, for example, 25,000 in cash on signing 200,000 shares. And then the next year it's a similar payment. And then the next year it's similar. And it only really steps up at the very end. So, we won't be fully diluted on that deal until we're, 100% certain that we want to move forward with 100% ownership of the project. So we'll see. But yeah, I mean, it could be up to 5 years, or, we have the right to accelerate it if we like what we see right away. So
yeah. Good. Anything you would like to add? I think we've covered a lot of the story.
No, I think that was a good overview. Thanks for the questions and thanks for the time. It was good to chat with you once again.
Yeah, so thank you very much, Simon Dyakowski of GSP Resource. And if you are interested in the stock, you can find it on the TSX Venture Exchange under the symbol GSPR, and on the Frankfurt Stock Exchange just recently listed under the symbol 0YD. So thanks for watching and goodbye.